Hello everyone, welcome back to the channel. In today's video, we are on the topic of market structure. We're talking about swing structure and substructure and how you can make sure you're using the right kind of structure for the timeframes you're trading. So on the chart here, I have an example of market structure. Now, structure is made up of higher highs and higher lows, or bearish structure is made up of lower lows and lower highs. We determine the direction of a trend by working out whether or not the market's making higher highs and higher lows, or lower highs and lower lows. The overall higher time frame picture brings us the swing structure. So if we are on, for example, the daily chart and we see the market moving up like this, we can see that we're bullish, okay? The trend is up. So the swing structure is therefore bullish. It's these larger impulsive moves in line with the larger trend. Now within the swing structure, the large upside moves, we do have these smaller corrective moves, okay? We know that a trend is made up of impulses and corrections, and these corrective moves are substructure. Now, within the substructure, we actually get smaller trends going the other way. So inside of bullish swing structure, we will have bearish substructure. And inside of bearish swing structure, we have bullish substructure. Now, this is why it's important to know which timeframes you're trading and which structure you should be using for your trades. Because if you are a swing trader, you obviously want to follow the swing structure. However, if you are a day trader, you need to make sure that you're not trying to trade with the larger trend when the lower time frame trend is actually moving the other way. So let's actually go and have a look at this on the charts, an example of this, so you can see what I mean by this, and you can hopefully then begin picking up on using the right structure and make sure that you're not trading using the wrong time frames. So in this example, we're going to be looking at Euro USD on the daily chart, and I'm going to show you the difference between the swing structure and the substructure. Now, if we look at Euro USD then, from this point back in mid-June, we can see that the market's actually been in a downtrend. Now, we can see the structure by actually marking out the breaks of structure. If we look here, we can clearly see we have multiple bearish breaks of structure, lower lows and lower highs continually forming in this market. Now, this actually tells us that the market is bearish and therefore we may be looking for sells. If we are trading the daily time frame, it's not wrong to look for sells because we can actually then follow the market structure using, higher time frame zones. Now, the mistake comes in when you are trading the low time frames, maybe you're intraday trading or you're trading the hourly, the 30-minute and so on, and you're still trying to trade in line with the bearish trend, okay? Now, if we're at this point and we start looking for shorts from where we are now, this could become a problem because the trend on the lower time frames is substructure, so it may not be aligning with the overall bearish picture. So taking it back to what we spoke about, we can see we have the impulse moves, which are the swing structure moves, and we have the corrective moves, which are the substructure moves. Now, as we can see right now, after these large impulses, we are currently in a substructure move or a corrective move, okay? So that means if we are then trading the low time frames, so let's drop to the hourly, for example, we need to make sure that we are trading with the lower time frame trend. Now we can see here from looking at the hourly chart that this is the low of the move, and from here we've actually had a bullish trend come in on that substructure. Now if I just show you what I mean here, we can see that we had first of all a break of structure from this point, and then we've had higher highs and higher lows continually forming in this market. Okay, so what we would be looking for is a break of structure to the downside or a continuation to the upside. We need to make sure we're not getting tied up in the wrong trends. As we know, we always want to trade with the trend. So that means if we're trading the hourly time frame and that hourly time frame is bullish, then we trade bullish, okay? If we're trading the daily and the daily's bearish, we can trade it bearish, but only from the daily zones. So looking at this example on Euro USD, then we can see that the hourly trend is still bullish, and we do indeed have a supply area up here, which hasn't yet been retested. So this is the movement where the impulsive bearish move came in. And what that actually leaves us with is a little bit of open space to the upside here that we could look to trade through. Now, while the market continues to make these higher highs and higher lows, I will therefore remain looking for buys, okay? And then maybe we can start looking for sells in line with the overall higher trend, the swing structure trend. But until then, we must follow the substructure because this is what's going to bring us the moves. So if we drop to some of the lower time frames now and see how the market reacts, we can see that we do indeed come down wick through, but actually reject off that level. So what that tells us is that we are still bullish. And if we actually then go to the lower time frames, you're going to see a trade that I took myself a couple of weeks ago. Now, as we can see, the floor held up quite nicely there. We wicked just through, but then we had a large impulsive move, and this brings us back to substructure again. Now, as you can see from this, the 5-minute substructure within that hourly trend was bearish, and from this point, it's now broken and gone back to bullish. So at this point, we could begin looking for areas to buy from, because we can see here that the trend is now moving bullish on the low time frames, which obviously aligns with the hourly time frame as well. And it's at this point we could begin looking for buys, perhaps a little something like this. Now, this is actually a trade that I took myself, and as you'll see, allowing it to play out, it did indeed work very, very nicely, and it did go through the target level. Zooming out on that position, we can now look at the swing structure and the substructure, just so that you understand exactly what it is that I'm talking about. Now, if we see from this point, we have had an impulse, a correction, an impulse, and a correction. So what that actually tells us is that this is the swing structure, and the substructure are these smaller moves in the opposite direction. Now, as you can see, throughout the substructure, we will have selling opportunities. And when the structure then breaks on these lower time frames, that is when we then see the corrective moves or the buying opportunities in line with the substructure. When the swing structure comes back into effect, breaking the structure of the substructure, we then move back down into a impulsive move or a swing structure move, the larger time frame move to sell through. Once again, when that structure then breaks, we get the buying opportunities in line with the substructure. So the key takeaway for this video is to make sure you're always trading with the right structure. If you're an intraday trader, you probably want to be following that substructure. And if you are a swing trader, you should be following the overall swing structure of the movement and following that overall larger impulsive movement. Here we have the markup of the swing structure and the substructure. Once again, just for you to recap, I recommend you take a note of this, mark it out, learn what this means, and then actually go and backtest in the markets, looking at the substructure and the swing structure, learning to identify substructure and swing structure, and making sure you are trading with the right kind of structure based on the time frames that you are trading. I hope you've enjoyed this video. If you have, please drop a like and make sure you subscribe so that you don't miss any more future videos, and drop a comment if you have anything to say or any questions about the market structure. I put together a free mini course to highlight the reasons why you're not winning at trading. It's going to show you the top 10 reasons why you're losing and how you can actually turn your results around. This course is a 13-part video series. It's entirely free to join. All you need to do is go to the link in the description and sign up. Now, I hope you enjoy that course. I hope you learn a thing or two. Many students have given me a lot of good feedback after going through the course. If you benefit from it, please do drop me a message, just giving me your feedback, and I'd love to see how you progress your trading from taking this course. So remember, the link in the description is going to take you to that free course. Hope you enjoy it. Let me know how it goes.